Right, time now for our business update, and Brian Quinn joins me on set. Good morning, Brian. We're starting with the US insurance industry, which is taking stock of the damage from two major hurricanes in short succession.
They're more or less breathing a sigh of relief, you could say. Now, while Hurricanes Harvey and Irma wreaked havoc in the Caribbean, their damages to the continental U.S. have been significantly less severe than expected. Now, that's not to say that they've been mild. Moody's Analytics estimating that the two storms have caused up to $200 billion worth of damage, with up to an additional $30 billion lost to disruption in the economy. But that's a far cry from some earlier estimates, which warned of $300 billion in losses from Irma alone. Now, that scale was avoided when the storm weakened before making landfall and avoided a direct hit on Miami. In large part, the cost of a storm can come down to luck. Had Irma hit Miami head-on, some analysts say those losses could have been doubled.
Indeed, it could have been much, much worse. So how are the markets taking that news?
Well, Wall Street really rallied Monday on that relief. The S&P 500, they're hitting a new record. Asian indexes following that lead in Tuesday trading, with stock markets there at a 10-year high. The Nikkei in Tokyo up over 1%. Kospi in South Korea gaining 0.2% despite tensions over those new sanctions on North Korea. Chinese indexes lagging a bit. The Shanghai Composite and the Hang Seng in Hong Kong posting some smaller gains there.
Turning now to Germany, where the biannual Frankfurt Motor Show is underway, and one segment of the expo seems to be charging ahead of the rest. Ha ha ha.
Sorry about that. Electric vehicles really giving the spark to this year's show, with not just companies but entire nations making it clear that the future will be measured in kilowatts, not liters. Haxi Myers-Belkin reports.
This year in Frankfurt, combustion engines are out and electric is in. 2 years after companies including Volkswagen admitted to falsifying the levels of emissions produced by their diesel cars, the focus now, perhaps unsurprisingly, is on the electrification transition. Norway, France and the UK have vowed to switch to a wholly electric fleet within the next 23 years. And Volkswagen has already announced a €20 billion investment to bring out 80 new electric vehicles by 2025. The company's CEO says the real challenge now is the infrastructure.
Everyone's asking when electric cars will be the norm. But it's not just about what is being offered, it's also about electric charging infrastructure. We have started an initiative together with Porsche, Mercedes, BMW and Ford. We have stated that we are committed to building a network of charging stations across European motorways.
This year, the company's showcasing a number of electric concept cars, including a new version of its self-driving Cedric model and updates of its ID range. Although German companies have faced criticism for not adopting electrification as quickly as others.
I think the Germans, of course, could have been a little bit more proactive, but of course, in the end, it's business. Making a business case, getting the best margin, the best utilization of all technology.
Electric, it seems, really is the future, one the public can get a glimpse of in Frankfurt until the 24th of September.
Well, now we'll take a look at some more of today's top business headlines, Rochelle. Toshiba is reported to be selling its memory chip business to Western Digital. Japanese business paper Nikkan Kogyo says that a consortium led by WD will pay just over $18 billion for the chip unit, and Toshiba needs that sale to cover losses at its bankrupt U.S. nuclear arm Westinghouse, but says it has yet to make a final decision on the buyer. Equifax is facing over 30 lawsuits in the United States after one of the largest data breaches ever. The credit reporting agency says hackers may have made off with highly sensitive personal financial data on over 140 million Americans. Among the suits are those accusing the company of securities fraud. Equifax shares are down 20% since the disclosure of the breach on September 7th. And a former Deutsche Bank executive is being sued by the U.S. government for fraud. The complaints relate to Deutsche's sale of mortgage-backed securities in the run-up to the 2008 financial crisis. Federal prosecutors say Paul Mangione misrepresented the quality of mortgages behind those securities. Deutsche settled related charges with the Justice Department in January for $7.2 billion.
Now, finally, it's a big day for Apple with several new iPhone models set to be launched at a company event today. But arch rival Samsung has reason to celebrate the announcement as well.
That's right. Among the new models, Apple is expected to launch the flagship iPhone X for its 10-year anniversary. One of the big selling points for the X, though, is its edge-to-edge super sharp OLED screen. That's OLED. The thing is, the only supplier capable of filling Apple's order for the screens is Samsung. Of the iPhone X's rumored $1,000 price tag, up to $130 go to Samsung for each screen. The two companies have long been battling for supremacy in the smartphone world, but along with roughly a quarter of the world's smartphone market share, Samsung also controls nearly 90% of the production capacity for smartphone OLED screens. That means if the new iPhone is a hit, Apple's chief rival gets a big piece of the pie. Does that count as irony? I never get it right.
Well, everyone wins. Everyone's happy.
Sure.
So that's a good thing,
That's
right?
great.
Okay,
Synergy.
Brian. Thank you so much. Brian Quinn there with the Business Roundup.